Hey everyone, welcome back to Corporate Decoder, the place where let's just say we dig into the nitty-gritty of corporate filings, even when those filings make you feel like you need a Swedish to English dictionary. Buckle up, because this one involves a company with byNordic in its name. But before we dive in, if you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below where you can chat about all things finance with other like-minded folks. Today we are looking into byNordic Acquisition Corporation, and let me tell you, there's a lot to unpack in this quarterly report. Think broken Nasdaq listing, a desperate search for a business to buy, and a ticking clock. So byNordic Acquisition Corporation, formed to buy another company, but struggling to find one. They're called a blank check company, which basically means they raised money with no specific target in mind. This report is for the quarter that ended in March of 2025. So let's see how they are doing more than 3 years after their IPO and still nothing to show for it. Here is a key thing about these companies. They have to keep the money they raised in a trust account invested very safely until they find a target. And as of March 31, 2025, they have about $12.1 million in that trust account. That money is supposed to help them buy a business. All right, let's look at their liabilities. The company owes $341,274 in accrued expenses, which is money they haven't paid yet for things like services or bills. They also owe another $6,085 million on a promissory note. And let's not forget about taxes. They owe some income taxes too, about $24,254 and $254. The company's accumulated deficit, which is like a running total of their losses, is over $13 million. That is a bad sign. The company is spending money and it isn't coming back. For the 3 months that ended in March 2025, they had a net loss of about $179,458. That means they spent more than they earned. Last year, same time, they made $94,733. That is a big change. The income came from the money in the trust and earned $125,971 in interest. A big drop from the $526,580 they got the previous year. That is probably because the trust is holding a lot less money. The company burned a lot of cash, $532,195. Last year it was a smaller amount, but still significant. That is not good. To deal with the low cash, the company borrowed $650,000 from a related party. We'll see more about that. Alright, so now we need to see what's going on. This section describes what the company does. Again, they were formed to buy another business. The clock is ticking though. The company only has until June 12, 2025 to complete a deal. And they can only extend that with money that they already put into the trust account. They had a big vote, a meeting of shareholders in August 2023 to try and buy more time and get rid of a rule that said they had to have a minimum amount of cash after people took their money out. In summer of 2024, they extended the date again, but it cost them. A lot of people pulled their money out. In summer of 2024, they issued even more promissory notes, which is basically another loan to get more money. The report talks about being kicked off of the Nasdaq Stock Exchange because they failed to complete a business combination by February 8, 2025. This is a big deal because it makes it harder for investors to buy and sell their stock. There is a war going on in Ukraine and a conflict in the Middle East, and they are saying that those conflicts could make it harder for them to find a business to buy. They also talk about the Inflation Reduction Act and a tax on stock buybacks. That could cost them money if people pull their money out when they do find a business to buy. As of March 31, 2025, they had about $269,457 in cash. That is all the money they have to try and find a business to buy. It is going to be hard. Because of the short time left, the high amount of debt, and not being able to complete a transaction before the deadline, the auditors raises substantial doubt about the company's ability to continue as a going concern. They are a small company, so they don't have to follow all the same rules as bigger companies. They also don't have to listen to new financial accounting standards. The company also has a fair value hierarchy, which is how they value their assets. Level 1 is best because it is based on actual prices. But level 3 is worse because it is based on what the company thinks things are worth. Let's look at how much the company is earning per share. For non-redeemable stock shares, they lost 2 cents a share. Last year, the same time, they made a cent per share. Ouch! The company has warrants out there which are like coupons to buy the stock at a later date. These warrants are exercisable to purchase 8,625,000 shares of Class A common stock in the aggregate. A private placement is when the company sells stock to certain investors without offering it to the public. In this case, the sponsor bought a bunch of shares at $10 a piece, worth over $9 million. This section gets very juicy. It tells all the deals the company is doing with people and companies that are related to it. The company issued promissory notes to the sponsor for a total of $6,885,000. That is a lot of money, and that debt will have to get paid eventually. They are paying the sponsor $10,000 a month to keep the lights on. If they liquidate, the lights go out. There is a forward purchase agreement where someone has promised to buy $10 million in stock at $10 million in stock at $10 million in stock at one help. The company finds someone. The report also talks about how the bankers got paid a big fee up front and are supposed to get another payment later when the company closes on a deal. The legal bills are on hold because they will only be paid at the end. The key people to look at things only look at a few items, so that is telling. So here's the thing, byNordic Acquisition Corporation is in a tough spot. They're burning cash and losing money with a short time to make a deal. They managed to extend the clock a bunch of times, but it cost them a lot of shareholders who wanted their money back. They got kicked off Nasdaq. The numbers are looking bad, but the trust still has some money and they are still trying to find someone to buy and keep going. It is a very tough place to be. What is most notable is that these guys are running out of time and they will probably not be able to complete a deal. I think it is hard to see them continuing. The best case scenario, they manage to close an acquisition and keep things afloat. They have high debt and it looks like this deal is going nowhere. Alright, that's our breakdown of byNordic Acquisition Corporation's latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.